Thank you very much, David. I'm very happy to be here to talk to you about my work in progress with my co-authors, David and Sarah. So in this paper, our goal is simple. It is easier said than done, but we are trying to understand the extent and the efficacy of governance exerted by institutional investors by teasing out the differences between engagements employed by active versus index investors. As we all know, institutional investment has been growing tremendously over the past few decades. And one of the most important trends that we have observed in terms of their investment strategies has been the increase in index investing away from active investing. So this is important for us to really understand the efficacy of this governance, because the previous literature and anecdotal evidence actually tells us that active versus index investors will have different financial incentives and strategies when they're engaging with their portfolio firms. For that reason, the extension or the extent or the efficacy of the engagement that they're doing will be very different from each other. So with that in mind, in this paper, we are asking the following question: how do active versus index investors engage with their portfolio companies? So we are asking if there are any observable differences in the nature, the mechanisms, the triggers, and the outcomes of engagement employed by active versus index. And second, we are trying to understand how do the comparative advantages of index versus active investors will be reflected in their stewardship choices. So our conjecture for this paper is that each group, index versus active, will play to their strengths. So index investors, by holding lots of portfolio firms and having longer-term investment horizons, they're going to be focusing on more corporate governance-related topics, and they're going to be engaging more formally through public channels, and they're going to be perceived to be less effective in that sense in terms of corporate operations and strategy, whereas for active investors, they're going to do their homeworks and they're going to have a discretionary horizon. For that reason, they are perceived to be more effective in inducing change in corporate behavior. Plus, they are going to be having less informal engagements, and they are going to be doing these engagements more frequently. So, of course, this is an empirical work, and the real challenge is to get the data on both active and index investor engagements, both through public and private channels. If you're familiar with this literature, you already know that any existing empirical work is mostly focusing on the voting outcomes. A few existing studies that we have that is related to active engagements are using data from specific asset management companies, so their results are not externally valid. In this paper, we are trying to solve this problem by approaching all the US publicly listed firms. The number is around 3,200. We are using a private confidential data set of emails of the general counsels and C-suite executives of these companies that is provided to us by one of the biggest asset management companies in the world in terms of AUM, and asking them through a survey to give us information about their engagement experience for the past 2 calendar years, plus some generalized questions. So in our survey, we are basically asking each company, how did they get engaged by active versus index investors? What were the topics of engagement? For each topic, what were the triggers? What were the perceived efficacy? What were the engagement parties from the company itself and also from the asset manager too? In addition to that, then we are getting into more detail if they're answering questions or if they're saying we got engaged in environmental and social topics, then we are going into further detail and asking specific questions related to climate change related engagement, diversity, human capital, and human rights. So if they're answering any topics related to that, then we ask about the specific outcomes, because what we're trying to get is the complete picture of this engagement and its outcomes specifically for these ESG topics or environmental and social topics, let's say. So, okay. With that in mind, in this survey, what we're trying to do again is to present this complete picture of the engagement landscape and understand how it affects the portfolio companies. Thank you very much for listening to me. I'm sorry I ran out of time.